All right, welcome back everyone. Today we're going to talk about debits and credits, introduction to T accounts. Here's a disclaimer and copyright notice. This presentation is copyright 2020, all rights reserved. Please share links to this presentation on an unmodified basis. All right, so debits and credits. I personally think that debits and credits are very powerful tool in teaching and learning accounting. My students who mastered this have made significant improvements in cracking difficult problems. So let's get into it. Generally, when we think about the word credit, we recall things like credit my account, credit card, credit to people. Also, the word debit reminds us of a debit card, debit my account, etc. But those are terms that are used in real world. In the world of accounting, debit means left and credit means right. Based on the type of transaction, debit could be useful or it could be bad. The same idea applies to credit. Now, there are several rules for debits and credits that we must keep in mind moving forward. First is that every transaction must have at least one debit and at least one credit. The second rule is that debits must equal credits for all transactions. If we want our debits to equal credits, we have to have at least one on each side in the transaction, as I mentioned before. Another rule we must keep in mind is that there are no negative numbers allowed, which means that we are either going to debit a positive number or credit a positive number. Now, let us talk about different accounts concerning debits and credits. Every account has a normal balance, which it carries under normal circumstances. In T accounts, we're going to put debits on the left side and credits on the right side. Assets and expenses have a normal debit balance, which means they sit on the left side of the T account. So let's look at an example to better understand this concept. At the beginning of the year, Addison Company's account receivable had a balance of $3,820. On March 9, Addison Company completes a $7,500 project for a client who must pay within 30 days. On March 12, Addison Company receives $3,500 cash as a partial payment for the work completed on March 9. So the beginning balance goes on the left side of the T account since it is a debit balance account. On March 9, we increase accounts receivable because it increases the amount of cash that our client owes us. Accounts receivable has a normal debit balance, and we show that increase with the debit. On March 12, we collect cash from the client, which reduces accounts receivable, and the client does not owe us the cash anymore because they paid us. We reduce a debit balance account with a credit entry. Therefore, we reduce accounts receivable with a credit. In order to find our ending balance, we add up our debits and subtract them from the sum of credits. Again, it is important to remember that debits will sometimes increase an account and sometimes they'll decrease an account. It all depends on the type of account. So for liabilities, equity, and revenue, they all have a normal credit balance, which goes on the right side of the T account. So let's look at an example of a liability account like accounts payable, which is an amount a company owes for items or services purchased on credit. So let's say on January 1st, 2019, Michael and Jim formed Michael Scarn Inc., MSI, and consulting business. Michael Scarn Inc., MSI, had a beginning balance of $20,000 in their accounts payable. On April 10, 2019, MSI receives an invoice from a consultant that MSI hired, Big Tuna Inc., BTI. The invoice is for $12,000. On September 1st, 2019, MSI pays the balance owed to BTI from April 10. So the beginning balance is on the credit side because it is a credit balance account. On April 10, 2019, we're going to increase the liability because we have an obligation to pay to Big Tuna for providing services to us. We increase the liability with credit. A credit entry increases accounts payable with a normal credit balance. On September 1st, 2019, we pay the remaining balance owed to BTI, which reduces the liability. We show a decreased liability with a debit. So a debit entry reduces accounts payable, which is a normal credit balance. The end of the period, we add up the credits, subtract the sum of the debits, get an ending balance of $20,000, which we write on the credit side because it is a credit balance account. All right, so now you probably think what the corresponding counts are in these examples. As we mentioned earlier, earlier, every transaction must have at least one debit and at least one credit. Well, that's what I'm going to cover in the next chapters. But for now, thank you for watching, and don't forget to like and subscribe, and we'll see you next time.